Hello, I'm Jai. Today I'm going to discuss about the accounting statement of BHP Group. Uh, so let's get started. So accounting for taxation involves the various accounting concepts for the treatment of tax expense in books. Like the recording of this data in books, you will know that how much tax to be paid to the tax authorities. If not, it's going to cost huge penalties by the authorities, and the and it can also act as a clear picture of the business did by the organization, and also it helps you to calculate the profits and the tax liabilities accurately. And different objectives have different treatments in accounting and taxation. And in this current presentation, we are going to apply the accounting taxation principles uh, on the BHP group to know its business output. Well, and moving on to the next slide, I would like to state few important terms that we are going to uh, use in this presentation to understand the accounting of taxation. Well, those are the accounting profit, taxable profit, and temporary differences. Well, accounting profit is can be calculated with the help of accounting standards, policies, principles, and the accounting concepts. It's a general information which is shown by the company in its annual report to all its stakeholders to understand its performance in terms of the business, to take an action in terms of the strategies is followed in a current financial year. So, well, with the help of accounting profit to any stakeholder, it can know its exact situation in the market of its presence in terms of brand, and moreover, taxable profit. It is taxable profit is the amount of profit that can be paid to the tax authorities by deducting the tax expense and the tax liabilities of a corporate entity. And coming to the temporary differences, these differences are the recording the various items while treating the accounting profit and taxable profit. These differences are not matching the accounting rules, concept, and guidelines. Sometimes they may not be matched, the accounting policies and the accounting concepts to the taxation rules and the taxation regulations, due to which these differences can be temporary. And moving on to the next slide, I would like to state few important concepts of an accounting. Those are deductible tax differences, deferred tax assets, and taxable temporary differences. Well, taxable temporary differences arises due to the difference between the accounting policies and taxation laws. This can be impact during the calculation of the tax for the corporate entity, in which it has to maintain the list of temporary differences, and it has to be update uh, yearly end. And when a temporary difference is reversed in a financial year, it has to be deducted from the list of such temporary differences. And moving on to the deferred tax assets, it arises due to the taxable temporary differences. When in a particular year is taken in the books of accounts according to the accounting policies and the principles and the concepts, but these expenses are not allowable in a particular financial year in tax returns due to the tax laws when an organization is required to pay such as expenses in a particular financial year. So moving on to the next slide, I would like to state about how to identify a deferred tax asset and a deferred tax liability. So from the diagram, we can understand that. We are, so first, I would like to describe how to identify a deferred tax asset. So it has to meet some conditions that can be stated below. So those are the any income or expense which can be paid in a current financial year, but it can be paid in a future year as well, but it can be paid in terms of liability. And also, moreover, uh, there should be a legal enforcement right to utilize those deferred tax assets. And moving on to the like how to recognize the deferred tax liability. So those conditions to be made are any income or expense which on which tax is not payable in the current financial year because they are not taxable. Uh, so those income is allowable expenses in a current financial year, but in the further years we can this income can be taxable. Such expenses not deductible in tax laws. So then there is a liability to pay tax in further. So I would like to move on to the next slide by showing you the income statement of the BHP group by differentiating from the year 2019 to the 2018. It's like a comparison. So so here you can see the temporary differences, which is stated various factors such as depreciation, exploration expenditure, employee benefits, closure, rehabilitation, resource rent tax. So we can compare. For an example, depreciation. It has decreased to 1770 in 2019 from 2756 in 2018, and exploration expenditure, which is uh, decreased to 449 millions from the 492 millions in 2018. And also you can see that the employee benefit has been reduced to 310 million from 321 in 2018. So and also we can see the other provisions which has been increased in 2019 of 144 millions from 141 in 2018. And these can be recorded in a financial statement of a BHP group. These are and deferred taxes are to be paid on a temporary difference, which are getting reversed in further years. And I would like to move on to the next slide by uh, stating the about the income statement, which can be showed in terms of consolidated and income tax payable. Well, from the consolidated income statement of PHP Group, we can see the expense is about 5,529 millions by the year of 2019 June 30 at the time. And also you can see that there will be a chances of in some tax refundable to the organization by the tax authorities. In such case, income tax refundable is shown in a current tax ahead of the consolidated balance sheet in the financial year of BHP Group. That is around 1,546 millions. And moving on to the next slide, I would like to say about the concept of temporary difference and permanent difference. So temporary difference is due to the just a cause of creation of deferred tax asset and deferred tax liabilities. This can be arises due to the presence of accounting policies and concepts and taxation rules. Sometimes these rules, concepts of accounting and the taxation may not be merged at a time, so that due to the conflicts, the temporary differences can be produced. And the permanent differences are the differences that arise due to the between the accounting and taxation laws. And also I would like to move on to the another slide. So here I would like to conclude the presentation by stating the key insights and the points of learning about the tax treatment of BHP Group Limited. As we know that the BHP group is a multinational group which can be operated in several countries across the globe by respecting the tax laws and the accounting principles of each country. And BHP Group is Australian-centered company, and it has huge impact by the US tax reforms. And also, we can see that the deferred tax assets and deferred tax liabilities are not set off each other. And thank you for listening my presentation.